It's about that time of day again. Welcome to your nightly newsletter, boys and girls. My name is Joseph James. It's Wednesday evening, March 4th, 2015, the fourth day of this third month of the year, 2015. We're only a few days away from daylight savings time here in the U.S. Yeah, I barely can contain myself. In tonight's newsletter, and I appreciate you guys being patient with me this week. I was out of the office yesterday evening, as I talked about in my last newsletter. Back here again, though, for a Wednesday evening. In tonight's newsletter, crude oil is bullish. I know, I haven't heard that word out of my mouth in a while. You know, we got some armchair traders that are speculating, they're gambling for higher prices, right? Price can't keep going lower forever, right? Well, we'll see. But today's price is way overbought, up around 52. So we look for short-term selling before we can even consider being a buyer right now, and our target remains down at $50 a barrel. Got a lot of clues on crude we're going to go over in a moment. How about gold? Gold is bearish. Yeah, shocker there. It's been bearish for a year now, but sitting right on top of $1,200 an ounce. So we're sitting right on top of the big round number on gold right now, so we need to get away from that big number. So we're staying patient for price to move higher above 1,200. But we've got that Friday's non-farm payroll report, which might throw a little bit of sawdust in the mix here before we get there. Stay tuned for more on gold. And how about the Russell? Russell is bearish as small cap investors quickly take profits at all-time highs. I think the NASDAQ at 5,000 really did it to them. That'll spook anybody, right? Seeing that go back to 5,000. So small cap investors definitely taking profit right now off the all-time highs on the Russell. Of course, we got Friday's non-farm payroll report. That's a pretty good idea if you're an investor long-term in the stock market. Well, we are selling resistance levels with this bearish trend, and we're going to use support levels as targets until something changes. So until we see something different, we'll continue here to be bearish on the Russell. As you can see, guys and gals, we have a great newsletter for you guys this evening. But before we begin, I do want to remind you to make sure you're watching this video over on our trading blog at sidewaysmarkets.com. There are 3 reasons why you got to get over here to sidewaysmarkets.com. If you're watching the video on our YouTube page right now, there's a link below the video. 3 reasons here. 1, you can download all of my charts. Every chart I'm going to use tonight, you can download those and have them ready for your own trading tomorrow. 2, upper left-hand corner, maybe you're curious what it feels like to be in our trade room. Maybe you're curious, what's all the commotion about? Maybe you're curious, how in the who do we use these newsletter levels every day in our live trade room? Well, if you're not a member of School of Trade, I would love to welcome you as a guest into our trade room. Grab your free pass, upper left-hand corner. And of course, the third thing, there was 3, we have a nightly newsletter mailing list. That's right, a mailing list dedicated towards our nightly newsletter. Every evening I'll send you an email when the newsletter is published. Now guys, don't forget, if you grab your free pass for the trade room or if you register for the newsletter mailing list, make sure you check your email, check your inbox, check your spam, your junk, your trash, whatever other folders you got there, because I'm going to send you a verification email. Alrighty? I think we're ready to rock and roll. Feels good to be back. I missed you guys last night. Yeah, I really did miss you last night. I was sitting in parking lot traffic on the 405 freeway here in Los Angeles, California. Shocker. All right, let's get started here with the gold on our 16 anchor chart. Gold is bearish. We know this for a fact, right? This has been nothing's new here on gold. And we've been playing this game where we wait for it to go up and we sell it back down. We wait for it to go down and buy it back up, and it's been working flawlessly for almost a year now. It's been about 8.5 months since we saw that 1,200 show up on our radar. So bottom line right now is this is the worst possible place right now to be entering into new trades. Big round numbers are price magnets, and this is one of the granddaddies of big round numbers, right? This is right up there with the 50, the 100 on crude. Okay, so we know we got a price magnet, and we got that narrowing price wedge. So really the strategy right now on gold is very, very simple. We've got Friday's non-farm payroll report where we're going to be hearing about the job situation. And everybody, of course, is kind of tiptoeing around the interest rates idea, right? All of a sudden, everyone's worried about the Fed. right? That's what all eyes and ears are worried about right now. They're worried about the Fed. When are they going to commit to raising interest rates? And, of course, that's why gold is acting the way it is right now, right? Whenever we talk about monetary policy, Gold is directly affected because of its just fundamental correlation to the dollar. So we know this metal, this yellow metal, we got to get it away from this 1200. So right now, what I suggest is to stay patient right now and look for sells up at these zones overhead. I'll tell you, the hardest part right now is going to be if price goes lower. If price goes lower without going higher, now we're talking about buying, right? And that's just really tough to swallow. So if you want to be a buyer, price goes lower, you're more than welcome. Not on my account, though. I will be selling. And if it goes lower without me, then so be it. I'm looking to sell at these highs, sell at resistance, take some profit at 1200, and then maybe we get an overshoot to that measured move target, 94.9, 91.3, 1186. Guys, I hate to be the bearer of bad news, but I just don't see us getting much else out of this. Tomorrow's Thursday. We're going to have we're most likely going to find ourselves right at 1200 come Friday morning at 8:30. So whatever you do, stay away from 1200. The only time you want to be trading around 1200 is to take profit, okay? Be patient on gold. Now, got a little bit better chart here to look at. Now you can see, of course, right, if you don't want to wait to get to 1208, right, 1206 to sell short, here's some other levels for you here right now. And as you can see, we got a bit of a trading range that we're working with right now, right? We got some range expansions. Those make for great targets. Range expansion, that makes for great resistance overhead. So just be aware. Still, same strategy applies to this, but now we've got more options. I've got as early as 1202.4, 12059, 12079. So not a lot is different here, but you're going to notice, though, if I had to guess right now, boy, the tastiest sell would be up here at 1207.9. And that lines up right with that 1206 to 1208. So this area right up around here is going to be prime territory for you sellers on gold. Stay patient for it. You can take a nibble to the downside here at 1202.4. But as you know, I always say it's okay to anticipate, but get proof. So make sure you got the proper entry trigger if you're going to be selling short at that 1202.4. Remember, the most important thing we can do right now on gold is to get far away from that 1200, right? Remember, we're only 24 ticks away from that 1200 right now. Be better off to wait, let it go all the way up, and then bring it back down. Okay, just my 2 cents on that. And then again, if you can get it up here and sell it, take a portion off at 1200, but leave a little bit. Try to get down to that range expansion target there at 94.9. Okay, just my opinion on the yellow metal. Now, don't forget, guys, these are longer-term levels. If you want real-time updates, if you want real-time trades called, come join me in my trade room, and we'll walk you right through all the fun stuff. Let's keep moving. How about some Rusty, the mighty mini Russell? Now, the E-mini markets, equity indexes, they're going to move in tandem. In my opinion, that 5,000 on the NASDAQ really spooked everybody here a couple days ago. And now we're definitely seeing that multi-day profit taking. As you can see, we're definitely bearish. We get a sloped moving average, lower lows, lower highs. And we notice the big bear channel here. Okay, so we're coming off all-time highs. We got a bear channel coming down. And you'll notice we break that channel. So which means we should see what I call the late adopters, right? The people who didn't have the cojones to get in short off the high. Now they're coming in later in the process. They feel a whole lot more comfortable now about selling. And of course, they'll probably try to run this thing down. I got a measured move target down around 1219.6. A little take half off your position at that 23.8. Hold the other half to 19.6. If we do go higher here, got a big old bull trap waiting for you. If we do go higher here, I'll be looking to sell this 32.7 range to 35. And, this may change here before Friday's non-farms, but I highly doubt it. Again, we got that non-farm payroll on Friday. I just don't see anyone taking big chances before we hear from the jobs report. So I don't think much is going to change between now and Friday. But all I can do right now is just trust this chart. Right now, this chart tells me nothing more than to be a seller. right? If I overthink it, though, I start thinking, well, we could go back to all-time highs and get a long-term, right? I'm going to focus on the chart, let the chart do the trading for me. But I can definitely see, though, where people will be overthinking this right now. I have to trust the chart that I see right now, right? I know why equities are bullish. It's the only game in town, the strong dollar. I get all of that. But, again, Friday's non-farm payroll report. I just don't think we're going to see investors take much more risk on this until we get through Friday. All right? So stay to the bear side here in the Russell until something changes. And you want to see what that something is? Here's what I'm talking about. Here's a very, very good looking chart here. This chart really throws a lot of stuff at you. And I think it gives you a lot of reasons to be bearish here as well. Let's take a look at it. Russell price action is bearish, as you can see, trading at the highs of this long-term channel. Right? Highs of the long-term channel. We want to sell the highs. Very, very easy there. But we can also see this little guy here, right? This little multi-level, multi-tiered little short-term bullish channel. And what's very interesting here is, and if you're a student of mine, you know how to read price action. You'll notice that we broke the channel, ran it back to the highs, and then failed. So what this tells me is those late adopters I was just talking about, right? You know, the folks that don't have the confidence to do it early enough, right? They're the last person to get an iPhone. Those people, you know what I'm talking about. The late adopters are coming in, and they're going to run it up. And you can see they immediately back right off it. They couldn't close new highs, right? Complete bearish engulfing right back. And you kind of notice the moving average isn't even there anymore. I mean, it's there, but you couldn't tell it's there, right? No one's reacting to it. So it looks like we have failed. Now, one more shot here, kind of play this bouncing ball here. I'm definitely bearish on this chart. So we're going to look for buyers to try one more time and fail at these range highs. So here's what I would expect to happen. Let's play the game of what if price goes higher, what if price goes sideways, and what if price goes lower. Deal? What if price goes higher? If price goes higher, we should be able to get to that 1233.2, right? We get a bullish move, goes sideways. There shouldn't be any problem. If it goes higher again, we're probably going to get to 1233.2. But that's pretty much where it should stop. We should see another try, a failure, and then come right back down. That's the way this should work. Okay, keyword should. Remember, it's okay to anticipate, but get proof. And I'll show you proof tomorrow morning in real time in my trade room when we're trading it live. So we know that we're looking at a bullish move here in the short term. If it goes higher, I expect it to go to the 33.2, and that's really where the line in the sand is right there. In my humble opinion, if we break and keep going above 33.2, I really don't see any reason why we won't probably run this sucker up here before Friday. I don't think that's going to be the case, but I don't get paid to think. I get paid to interpret what the market is telling me at this time. Okay, so we know right now that's scenario one. Scenario one is I go up, I see a fake out breakout and a collapse. Scenario two, I go up, I try again, I'm successful, and now we run it, right? Because again, remember, we've been on a year-long bull run. People have not forgotten about that. This is just a short-term session of profit-taking here this week ahead of Friday's jobs report. That's all it is, right? Trust me, that 5,000 in the NASDAQ should spook anybody, right? It really should. Just think about it for a second. It's 15 years ago, right? That'll cause you to take some profit. Absolutely. If you were involved in the stock market at that time, it's going to make you sick to your stomach even thinking about that 5,000. So people took profit, and we know that we could push up. Scenario 1 and 2 tell you where that move will go. Scenario 3, what if we go sideways? If we just go sideways here, we're going to look, remember I told you if price goes higher out of there, we know we're going to 33.2. But if we go sideways here, look for a bull trap at the lows. Look for the bulls to try to buy it. If they fail, you get a retracement lower. So again, I'm watching for those buyers to try and fail. That's going to be the critical moment that we know it's time to get short off these highs. Now, the final scenario, what if we just go lower? If we go lower, be careful of a bear trap here at 26.5, right? Take this trading range, copy and paste, and you can easily see we get a level of support there at 26.5. So if we go lower, Again, this is where you're going to see those buyers come in, try to buy it, fail, and we're toast on the way down. One thing is for sure, though, be very careful selling into that 26.5. Once we get below 26.5, we should have no problem getting down to that 22.5, getting down to that 19.8, or possibly all the way down to the lows of that bear channel. If I had to guess right now, we're most likely here going to run lower, make a fake break at the high, and then collapse. I don't think it's going to make it that easy on us right now, just the way this thing looks on this chart right now. Again, stay to the bear side, look for the bears until we get and stay above this range expansion resistance at 33.2. That's my line in the sand. Everything else, I'm looking for buyers to try and fail, right? Buyers to try and fail. Buyers to try and fail, okay? Once we slip below 26.5, you literally have free and clear down to 22s and 19s. All right, guys, that's our plan for tomorrow. A little bit choppy there, a little bit challenging there on the Russell. But remember, stay focused on those buyers failing everywhere below 33.2, and you'll get in on the right side of the market. Continuing here now on crude oil futures. Boy, a little perky market we've had here, right? Been very interesting this week here on the black gold. Crude oil is bullish. I know it's hard for my tongue to even say that word after the term crude oil, but here we go. You can easily see, right? And this is an example where we can't let our emotions trade for us. Believe me, it took a lot of time for me to get used to saying the word bullish right now, but it's clearly bullish. Now, what's happening is, and no joke, true story, I walk into my first meeting yesterday. Okay, and the secretary behind the desk says, well, what do you guys do? And I say, we're traders. I'm with my trading team. We're talking to, we had to have a meeting with our attorneys. And literally she looks at me, she goes, have you seen crude oil? And I look at my guys with me and I said, you just heard that, right? You just heard the receptionist behind the desk of my attorney. The first thing out of her mouth when she found out I was involved with the markets was, have you seen crude? And I'm going, oh my goodness, we have entered into, this is the end of the world coming. It's the end of the world coming. So we've got the water cooler traders involved now. Of course they are. I told you this a few months ago. It's going to happen, right? It only takes a couple of fill-ups of the gas tank to go, oh yeah, this really shouldn't be this low. I wonder what's going on. You turn the television on, everyone's hooting and hollering about prices. And there's a lot of people right now who are telling me, it can't keep going lower forever, right? I'm going to buy as much as I can right now. Obviously, I agree and disagree with a lot of those things right now. I believe in following the chart. I don't believe anything else. Nothing else really has been proven to work as well as following the chart. I understand why people are bullish on crude because they don't think it can go any lower. But I will encourage you to look at history, and we have seen this twice in the past 50 years where we had a major drop, a rally up, right, a gambler's rally, and then it collapses even further before making the big run. So I'm going to trade the chart. But I thought that was it gave me a good laugh yesterday afternoon, and I couldn't wait to come back and talk to you guys about it. So we're definitely getting the armchair, the water cooler, right, the Monday morning quarterback traders right now. We're definitely getting the kids on their cell phones trading crude. The great part about this, right, you might be wondering, so Joe, where's the silver lining? The silver lining is if you know how to trade against rookies, if you know how to find traps, right? If you know how to find traps, trading crude is easy money. It's just like trading gold a couple of years ago when everyone was talking about gold. It's a little bit frustrating to see people buy this thing up right now just purely out of speculation. But guys, guess what? That's the game. If you don't like the game, get out of the game. Leave the game. Right? We can't change the game. We're going to play the game. The best way to profit at the game right now is to look for those rookies and retail traders doing stupid things in the market, buying highs, selling lows, blindly buying pullbacks. It's, again, relatively easy, relatively being the key word. You got to know how to speak the language of the price action and find those trapped in traders on the wrong side of the market. But for now, we have a bullish market. Today's price is way overbought, so we're looking for short-term selling before we consider, right? Yeah, see, I had to slip in at the end there, right? You knew I couldn't resist talking about the $50 a barrel, right? I was holding out on you. Now, all joking aside, we are in a bearish trend right now, but I want you to see a couple big clues on this. The first thing is, look where we are, right? I don't care if this is all you see on this chart. Look where we are. Okay, if I'm a bull, I'm a foolish bull, soon to be a bankrupt bull if I buy this high. Now I know there might be something crazy that comes out overnight and you might be emailing me tomorrow saying, ha, see, it went higher. Okay, I get it. But try to do that more than just once and you will see right away. You cannot make money long term buying at a premium price and selling at a discounted price. You can't. So we're not going to buy these highs, right? No professional trader in the world will ever tell you differently. So I have no other option than to be a seller at these highs. But remember, I need proof. I can't just anticipate being at the highs and I can sell. I need proof. Joe, give me some proof. Okay, how about this proof? Let's line up the highs here and let's look at volume. Dum-dee-dum, dum, da-da-da-dum, dee-dum, dum. Now don't forget, that high right there, that lines up with this low. Okay? Don't confuse that. We get the next high right there, and it is not confirming volume, right? Took me a few tries on this one, but you can see, right? The high volume spike was clearly profit taking off those highs, right? Easy to see it. So volume does not confirm this move to the highs. We're way up at the highs. I am bullish in my trend right now, but I have no option here to be a buyer. So here's a couple scenarios we have. Scenario one, what I'll be looking for is for the buyers to try and fail. Remember, that's the easiest way to make money. Wait for the rookie, retail, unsuspecting victims to try to buy these highs, and they might be successful. Let's be honest. They might be successful. Sure. Wouldn't be the first time, right? Jumps up to the range expansion target, 52, 54. Sure, that could happen. But if they try and they fail, yeah, their stops are going to be going right into my targets on the way back down. That's the best way to play it, is to wait for the buyers to try and whoops-a-daisy, right? They drop off, and you know what's going to happen. The minute they get stopped out, it's going to flood the market with sells as all these buyers take their profit at the highs. Hopefully listen to my newsletter. I've got targets to the downside. We'll call that 51. Targets 50.80, and then there's that $50 a barrel target. $50 a barrel continues to be my target right now, whether we like it or not. Now, if you are a buyer right now, you've got to stay patient. You can buy this 51. You can buy this 50.80. You can buy this 50 even. All right? You can buy the 49.9. If you're really a smart bull, you're going to stay patient to buy this area down here, 49.90. Okay? So whether you're a bull or a bear right now, we're in a bullish trend, but we are well overbought at the highs, and volume does not confirm. Let's keep going. Last but not least, another very important chart here. Let's rock and roll. Crude oil price action is bullish. Again, we know that already, but we're trading all the way at the highs of the channel. Again, nothing new there. So it's impossible for us to want to be a buyer here right now. And like I keep saying, at these highs, you don't want to try to sell this high right here. I mean, you do, but you don't. Wait for the buyers to try and fail. So let's go through the scenarios. What if price goes higher? What if price goes lower? What if price goes sideways? If price goes higher, I won't be surprised at all. Right? Get a measured move target, 52.15, clear trading range, copy and paste, right? Very similar to what we saw on the Russell. So now price goes up. We get a big bull trap up top here. And if price goes higher, I will once again look for them to try again and fail. That's scenario one. I would expect price to try to go higher here. I wouldn't expect it to be that easy, right? If it just collapses off the highs, I'm going to be really disappointed in these buyers. Okay, although I won't blame them for not buying this high, but I just know how these markets work. They're built to take your money. That's why you need professional coaching. That's why you need experience. Okay, and you can speed up the experience process by trading with professionals. Right? It's pretty easy to see. So we know we get a measured move. We know we get a range expansion. And again, I just don't think it's going to be this easy just to sell the highs. So what I'm looking for here is if we go higher, let them take it higher. Wait for them to keep buying it, and once they fail, that's when you know. Because what's going to happen is they're going to dump their buys, execute those sells. It's going to throw a ton of fuel in the fire, no pun intended, and it should come right back down. Okay. Now, what if price goes sideways? If price goes sideways, be aware there's going to be a bear trap right below this range. Okay. Again, it could just launch right through it. It could just blow right through that support. I don't think that's going to happen, though, because history repeats itself. We get a bullish move going into the range. We should see a bear trap down at those lows. So bottom line is you can probably buy that low. It'll be short term, obviously, very, very short term. But whatever you do not sell that 51.46 break. What's likely to happen is we're likely to go lower, again, in this scenario. If we go lower, we're likely to poke our head out just enough to get those sellers involved, and then you're going to see it come right back in, stop everybody out, and then make the move lower. Okay, capiche? Now, what if we go right through it? If we go right through it, you've got support waiting for you down here. Okay, this is our range expansion support. It's right there at 51. Isn't it amazing how that last chart with completely different information, right? Different chart, looks completely different, different stuff. Look, 51.02. So we've got multiple levels there at that 51 even. This one just happens to be a trading range expansion. So what I would recommend we do is be ready for the bear trap here, sell it after the bear trap occurs, take some profit at the range expansion, and then hold a portion down to 50. Okay, hold a portion down to 50. Now, there is a chance that this may turn into a long-term sideways range. And if it does, come out and see me tomorrow morning. We'll play it by ear because it's all going to depend on what those highs and lows of that range looks like. Right now, though, you've got to think we're bullish, but we're too high up to be a buyer right now. If you're a buyer, you want to wait for price to come back down to give it a buy again. Right? Scenario one, we go up, buyer trap, right? Bull trap, and sell those highs. Scenario two, we go sideways, bear trap. Don't take that bait. Don't take that bait. Wait for it to get through it. Sell the retracement, and then take our profit here, range expansion support, hold the position down to 50, which also puts us all the way back at the bottom of that long-term bearish channel. Okay, whether you trade in the Russell or crude oil right now, we're right up at those short-term range highs. So be aware of the situation. If you want to get short, wait for the buyers to fail. If you're a buyer, wait patiently for price to pull off these highs before you start buying anymore. Guys and gals, that's just my opinion here on what I expect for tomorrow. I would love to hear your opinion. Send me your feedback to JJ at School of Trade, or just simply post a comment below the video. And don't forget to come out and see us again tomorrow evening. Before I let you guys go, don't forget to download those charts for this evening. Don't forget to grab your free pass, register for the newsletter mailing list, and of course, if you happen to stumble over here to SchoolOfTrade.com, don't forget we get the best free trial in the business. I'll prove it to you. Register for the free trial and you'll learn all about how I trade here at School of Trade. And while you're here, don't forget we have 3 levels of membership and we've got someone standing by here 24/7, 365 to give you a hand. Guys and gals, thank you so much for being patient with me this week. I had to work myself through a couple meetings here this week, but I'm back full time the rest of the week. Only a couple days left until our daylight savings time, and I'm finally not leaving the office in the dark. I know exactly what you're thinking right now. Yeah, that's right. Amen to that. Guys and gals, be well, be nice to each other, and don't forget to come out and see me again tomorrow morning, 8 a.m. Eastern Time, or back here tomorrow, same time, same place. We got one more newsletter this week for Thursday evening, and I'm out of here. My name is JJ. Thank you so much for being here. Adios, amigos. Bye-bye for now.